Hey traders. Alright, so this video is going on from the previous video that I've just uploaded, which has to do with the analysis for the simple forex strategy that I've got. And that was where when the 250 cross, we're coming down, consolidation happens, price comes to commune with the 50, and then we're taking trades to the low, right? What I wanted to show you is what just happened with news. I've been harping on about this for a while, where when you are checking to see news, to see at what point a news release may happen, tie that in with your overall analysis like we did here. And what that's going to possibly give you is an indication of the directional move that the market is going in. The market makers, the institutions, the big brokers, what they're going to do is they're going to utilize the news in a fashion where stop hunts will happen. So they will, and this is going to happen especially when there's a pretty decent directional move that's about to happen, right? So in this case, what did happen was that some JPY news got released not too long ago. So in New York, it's 10:02 p.m. and the news release was happening at about 9:56 p.m. The release itself has come out to be pretty much on par with what the forecast was, so nothing too bad. But if you go back to your charts, what you're going to find is, and I'm going to tile these because I want to show you all the currency pairs, all right? The markets in particular, see, this is where this was where the news release actually happened. Notice how there's a massive wick to the high, right? It didn't need to happen. The forecast was on par. But in this case, what the markets did do was use that to stop hunt anyone that had accurately selected the directional move from, say, up here, right? This is, remember where I said the entry should have been? So let's go back into this, zoom into it a little bit, and I'll show you again. So this is where the entry should have been right here. Look at the extent to which the wick went up to. Right? Go across to the right. This is where the wick went up till. A lot of people out there would have written this out, and then at some point they would have brought their stop losses all the way down to maybe this point, or even to this point, or probably this point, given the wick of this one, possibly down to this point. What this candle did effectively was to stop them out. Okay, they probably would have had some profit, but that stopped them out, and then market goes into continuation. For those of you that did not bank profits, and you were here right now, just with your JPY alone, you would be, well, this is going down beautifully, 30 pips in the money. Pound JPY, again, just off this simple strategy, if your entry was, you could have taken it here, you're already 36 pip in the money. So we're talking 70 pips already. If you were to take AUD JPY as well, then your entry here or here, let's say you took this entry here, another 20, so 90 pips in the money. And let's look at CHF JPY. If you took your entry either here, or let's go down to the lower one. Right now we've got another 26 pips also, so we'll give that 25, and you are now sitting very comfortably at 115 pips in the money. And that's all you've got to do. There's nothing more else to it. Just be mindful of the fact that these stop hunts will happen. How do you get around them? Well, this is how you do it. Let's go back to Euro JPY. Your stop loss, I'll just get rid of these lines. Your stop loss, don't trail them. Don't bring them down. Don't make them very tight. Your stop loss, well, let me just move this one in actual fact. Your stop loss, I would say, would be above what presently the high of the session is. Keep them up. To what extent, how far above the high you go, it's dependent. Look, the market could spike all the way up above, up here somewhere. But in order for it to go spike up, we're talking 50 pips or so, right? So if you have taken the entry here, market's down here somewhere, give it maybe 10, 15, 20 pips above. And really, again, and I want to reiterate this point, your stop losses are only there just in case something drastic happens and the market just goes, spikes up, maybe 100 pips up or something. In that case, yes, you might lose, say, 50 pips or whatever it is, but at least you don't end up losing 100 pips. You will not enter into any trade where you're second guessing yourself. And so for that reason, you will not enter into a trade that possibly will require a stop loss. So even in this case here, your stop loss would be above the high of the present session. Same thing with AUDJPY. We'll bring this line as a indicator of stop loss somewhere above your high. Where 10-15 pips or so would be fine, depending on where you are here. If you're trading near the high, given currency pair, I'd give it maybe 25 pips or more, 30 pips, 40 pips, 50 pips. Again, it's really dependent on currency pair that you're trading, but you will not have stop losses where you're constantly pulling them down just in case, because this sort of behavior, these wicks to the high, they're guaranteed. They're going to happen. When a market is going to move in a particular direction, they're going to throw wicks at you to stop you out. Okay? Just be mindful of that. Go back into your charts and study this behavior. All right. All the best.